I'm Julie Borson in Los Angeles with breaking news on the ongoing dispute between cable companies Time Warner Cable and Viacom and the content company Time Warner Cable and Cablevision and the content companies like Viacom about distributing their content to iPad apps within consumers' homes. This battle has now gone to court. Time Warner Cable has asked for a court to make the decision about how this should be handled, asking for a declaratory judgment. And Viacom has responded with a lawsuit citing copyright infringement. So we see these two different companies, Time Warner Cable and Viacom, both taking legal action against each other. This issue has been discussed now for weeks since this app launched, but now we're finally seeing it going to court. Maria, over to you.
All right, thanks so much, Julia. Meanwhile, shares of Cisco falling in today's regular session on the heels of comments from Cisco Chief Executive John Chambers. He told the analyst community and investors at a conference about the company's potential weaknesses, including competitive pressures, slow decision-making, and weak execution. Given that, is the stock a buy or a sell right now? We've got both sides of the debate on Cisco. Of course, it has been front and center for the last couple of sessions. Breaking down the bull case is Mark Sue, analyst at RBC Capital Markets. And for the Bears, Harry Rado is Chief Investment Officer and Portfolio Manager of Rady Asset Management. Good to have you on the program, gentlemen. Welcome.
Thank you.
Thank you.
Mark, let me kick this off with you. How do you think the latest comments by John Chambers affect your bullish rating on the stock?
I think, Maria, before you have a recovery, you have to have an admission that there were problems. And I think Cisco got very complicated, very complacent. They lost their focus. But the admission in itself, I think, is going to go a long way in helping the stock stabilize. Now, what will drive the stock appreciation going forward is what they do, what tough decisions that they make over the next month or so.
So, Harry, you say Cisco is basically dead money right here.
I do. You know, we're a deep value contrarian investor. So Cisco is the profile of stock that we would invest in. And it's our job to avoid dead money and value traps. And we think Cisco is just that. We just think that the growth via acquisition strategy is really coming home to roost. We think that they've really junked up their balance sheet with goodwill, and we expect some goodwill write-downs coming. And we think there are just too many business lines, and that their foray into consumer products and the low end has really diluted the brand, and they've tainted the brand. And last but not least, this conglomerate discount. Even if they turn things around, the conglomerate discount will continue to persist, and multiple expansion is really unlikely, and that's how you make money in the stock market.
Mark, what about that? What about the concerns that Harry brings up?
I think a lot of that is valid. I think, and it's also coming from the company itself. They spread themselves too thin, and I think the view is over the next month or so, they should be divesting some assets. And when we do our financial modeling, we think about 10% of the business at least should go, and that has actually very good margin implications. You are trying to unlock some value and focus the company once again to the markets that make sense, because you don't want to be a holding company. You want to start growing again.
And Mark, you say synergy is needed to bridge Cisco's various business units, and that you think some segments should be cut. Which ones?
When we look at the business segments, and we did an analysis across the board, I think the set-top box business, it's a consumer business, it's very tough, low margins. The Linksys home networking business, that should go. I think the flip camera, that should go. I think also the UMI teleconferencing for consumers, that should go. And I think narrowing the focus, improving the margins, I think that will help the stock recover from here. So you do have potential forward catalysts, so I think for the near term, you have some stabilization.
Harry, what is it going to take for you to buy Cisco? What's it going to take for you to get positive on this name?
Time. You know, this kind of reminds me of a technological version of Citigroup, and they are where Citigroup was a couple of years ago, so it's going to take some time. You know, we'd prefer to kind of build our own Cisco, if you will. You know, we'd want to buy some of their smaller, out-of-favor competitors like a JDSU, an Akamai, an F5, an NVIDIA. We don't want to own their problems. We want to own smaller, nimble companies that have the potential to be acquired by the likes of Cisco.
And what about John Chambers? What is his fate?
You know, I think it remains to be seen. I mean, he's executed a growth via acquisition strategy, and he's a very brilliant operator. It's a question of whether the board is going to give him time to operate his way out of this this growth via acquisition mess.
Mark, what do you think? Can John Chambers do it?
I think a recovery occurs in stages, Maria. First, you have to recognize there are problems, then you have to divest, then you have to retool, and then you have to standardize a new process so that you could get things done a little bit faster so that you're not forced to make tough decisions like you are now. I think there's a lot of opportunities, there's a lot of moving parts, and I think they have a short time horizon to do so, but our view is that they're going to probably execute it.
So then John Chambers will execute, is what you're saying?
That's correct, Maria.
Yeah, okay. Harry, is there another name that you would buy over Cisco right here?
Yeah, I mean, just like I outlined earlier, we just think a basket of smaller competitors, JDSU, Akamai, F5, NVIDIA. You know, there's a host of out-of-favor, smaller, more nimble names, you know, not necessarily in the realm of Cisco, but we're very bullish on research in motion. You know, just out of favor, 8 times earnings, enormous revenue growth. Everybody hates it. Just don't want to own Cisco. Too big,
Right.
Not nimble, conglomerate discount. It's got a ways to go.
Harry, Rady, and Mark, Sue, thank you so much. We appreciate your time tonight. We'll see you
Thank
soon,
you.
guys. Thank you so
Thanks,
much.
Maria.
Are we on the verge of a double dip in home prices?